Hi guys, and welcome back to the class. In this section I'm going to give you guys a brief introduction regarding support and resistance. So as a retail trader, you must understand that retail traders do not move the markets, as in speculators do not move the markets. Only large institutions move the markets, and these large institutions, they base their actions on key price levels. So as retail traders, by limiting our trades around clearly established price support and resistance levels, we can align our trades in the direction of the large institutions. So you have to be patient, and sometimes doing nothing is a winning trading position since you're not risking nothing. In general, support and resistance levels identify areas of key supply and demand zones. Right, supply and demand. This is a topic for the advanced course. We are going to be discussing this in the advanced course section. So, what is a resistant area? A resistance is an area on a chart where sellers are likely going to overwhelm the buyers, causing the market to go to the downside. Right? A support area on a chart is an area where buyers are likely going to overwhelm sellers, causing the market to go up to the upside, meaning you'll be buying. So you sell at a resistance level, you buy at a support level. Now take note, a support level can become a resistance level, and a resistance can become also support if and when price break through these areas. So looking at the chart, we've got Euro JPY weekly chart. How then do we get to plot support and resistance price level? So the easiest way you can plot your support and resistance lines is by switching to a line chart first. On your platform, you've got the line chart here. You click on the line chart. Right, I'm only going to focus on the period from July 2019. You see that highlighted area. I'm going to draw some key price levels there to show you how to mark out your support and resistance. So with your line chart on, grab your horizontal line too. Now mark out any peaks and any lows that you see on the line chart. Now remember to mark the peaks differently to the lows. So we're gonna start marking the peaks. We've got one here. I've got a purple line. Then I'm gonna copy that line again and mark out. You see we've got peak here, we've got a peak here, and then we've got another peak here, and then we've got another one here. So now I've marked the what? The peaks. Now I'm gonna mark the lows. Right, I'm gonna borrow this line here, then I mark this low, but I'm gonna change the color now. Right, I'm gonna give it say red color. Right, so that's the first low, then we've got the second low here, and then we've got a couple of lows in this range here. You see this range, we've got a couple of lows there, and then we've got some here. See here. Right, now that you have marked these key price points, price levels on your weekly chart, switch to a daily chart. Right, once we switch to a daily chart, now I'm gonna switch to a candlestick chart type. Now you can clearly see how price respects my purple line and red line. The purple line representing resistance, the red line representing support. You can clearly see here price found support. It couldn't break the red line, meaning it found support and market turned to the upside. Looking from the upside, the purple line, which is resistance, price found resistance. Right, market traded into the resistance, bounced to the downside. Trade into the resistance, bounce to the downside. Same applies here. You can see market traded into the resistance area and bounced. Trade into the resistance and bounce to the downside. Trade into the resistance and bounce to the downside. So it becomes more clear when you go to a lower time frame. I want you to focus on this area here. You see, this is a daily time frame. Let's focus on this area here. The last two daily candles, of which today is Tuesday 14th of April. So we got the today's candle and yesterday's candle, which is Monday the 13th. So let's focus on that price zone. I'm gonna go into a lower time frame. Let me go to a H1. Remember, we want daily, so we are focusing on this red line, which is our support zone, coming in at 117.31. Now I'm gonna go straight to a H1. There is our 117.31 price level. You can see how price has respected that key level. Price dropped down from an area of resistance, dropped down, traded above, dropped down, trade to the upside. Why did I say this area is resistance? Because it was broken here. It was support. Remember, red line was determining our support, but price broke through and closed below, then it became resistance here. Let me highlight that for you quickly. Price broke through here and closed below. This is what we call a resistance which has flipped, or resistance has been broken. Remember what I said, resistance can become support and support can become resistance. So in this example, it's support which has now become resistance. Price broke, traded back to that level and pushed to the downside. When price came back, found resistance, pushed to the downside. Price came back, found resistance, pushed to the downside. You see, so this is how you trade support and resistance. You plot your key levels on a higher time frame, on a weekly time frame or on a monthly time frame. It's those key levels that will be of importance when you're now trading on a lower time frame for your entry time zone. You can see now I've gone down to a 15-minute time frame, and you can see price dropped into our key support area, found support. This is where you'd have bought, but of course there's more conditions that you have to put into considerations before you buy. Unfortunately, this is for the advanced course. So you buy and market bounced, it came back again, right? Market found support. So when price dropped here, you'd have been anticipating to what? To buy. because price is hitting your weekly support area. And look what happened. Price dropped in and traded away from the support for close to, it is the high here coming in it, for close to almost 45 pips. You see, this would have been your second entry. Your first entry would have been here, somewhere in this range here, all the way close to 60 pips. So you can clearly see that this pair Euro JPY, since yesterday, it offered you two highly possible trades from a support level. You see, because this would have been yesterday's entry, this would have been today's entry. So this is how you trade support and resistance, guys. But of course, there's more to it that you have to consider. But for beginners guide, this is the basic understanding that you need to have. So you buy at a support, you sell at a resistance zone. So now when it comes to time frames, right, like many people always ask me, Ivan, which time frames really do work in terms of plotting support and resistance? This now in most cases is a personal preference, but generally higher time frame levels are more reliable than lower time frame levels. A good example is what I just shown you now. Remember the daily, the support line, the red line on the chart is on a weekly support level, and you can see how price so far has respected that level. However, the frequency of setups will be considerably reduced if you trade clean daily and above levels, because they don't form as often. You see, personally my preference is on the H4 and daily time frame. So what I urge you guys, since you are starting, find a time frame that works for you, that gives you a good balance between setup frequency and setup quality. Meaning, I'm urging you to work more on higher time frame, which is weekly and daily, for you to really understand perfectly. Because if you try to focus on lower time frame, yes, support and resistance can work to as low as 1 minute time frame, you see. But since you'll be starting, it's much better to work on higher time frames. So this is what I wanted to just give you a brief introduction. There's more to it, but just decided that in this beginner's guide I should give you an introduction to support and resistance, because a whole lot of concepts regarding price actions are based on support and resistance. So that's why I had to do this short introduction, so that you can understand, you have an idea when you're reading your market structure. So that's much about it for this section, and I'll see you again guys in the next class. Thank you.